Welcome everybody to FITCSP. Today I want to talk about a home equity line of credit. In my previous video I talked about a home equity loan. If you didn't get to watch it, check it out so you can get some more information on that as an option. This option of a home equity line of credit has its similarities and differences from a home equity loan. What I want to discuss is what is a home equity line of credit, how it works, and some of the benefits to it. So stick around as I get into it right after this. A home equity line of credit, also known as a HELOC, is a line of credit secured by your home that gives you a revolving credit line. What that means is you can use the money whenever you want to, and as you pay back what you have used, it becomes available for you to reuse again. Similar to how a credit card works. Just like a home equity loan, you can only borrow to so much of the equity. Generally, you can go up to 80% of the value of your home, and at some places they might allow 85%. If you want to know how much equity you have in your home, and what you want to do is take the value of your home and minus the balance that you currently owe. This is only if you already have an existing mortgage. If your home is paid for, then whatever the value of your home is how much equity you have. Let me give you an example if you have an existing mortgage. Let's just say your home is worth $250,000 and you owe $150,000, then the equity you have available is $100,000. Now, that doesn't mean that you can borrow against the full $100,000. The maximum loan amount is $50,000, which is 80% of the loan to value. I will give you a demonstration on how I got that. In order to get that figure, what you would do is take your current balance that you owe and add the amount you want to borrow together. So, if your current loan balance is $150,000 and you want to borrow $50,000, then your new loan balance would be $200,000. Then what you want to do is divide that by the value of your home, which for this example was $250,000. Once you do the math, that will give you a loan to value ratio, which is 80%. So $150,000 plus $50,000 equals $200,000 divided by $250,000 gives you 80%. Or to make this easier, take the value of your home, for this example was $250,000, and multiply that by 80%, and that will give you $200,000. Minus the balance you currently owe, which is $150,000. And that would tell you how much you can borrow up to, which is $50,000. As long as it's within the lender's guidelines, you are good to possibly take out that much equity. Since you now know how a home equity line of credit works, along with an example of how to calculate how much equity you can borrow, I want to get into how a home equity line of credit works. So the way that a home equity line of credit works is you have what they call a 10-year draw period. What that means is you can borrow again and again as much or as little as you need up to the credit limit throughout the draw period, which is typically 10 years. After the draw period ends, you won't be able to withdraw any more funds. If you have any outstanding balances after the draw period, then you will have a 20-year loan repayment period. You can pay it off before the 20 years or even within 10 years during that draw period if you want to. Now, FYI, you can always refinance to extend the draw period if you still wanted access to those funds. Okay, the best way to describe a HELOC is similar to a credit card, only this is backed by your home. You have a limit that you can spend up to, and as you pay back the outstanding balance, the credit is available to you again. Like a credit card, a HELOC has a variable interest rate. What that means is that your rate can change from month to month. As you withdraw money from your HELOC, payments may change based on your balance and interest rate fluctuations. Now, some lenders do offer a fixed rate / fixed term option. So what that means is that you can convert a portion of your balance that you withdraw into a fixed interest rate and term versus it being a variable rate. There are multiple ways to access the funds. You can transfer the money into your bank account and withdraw it from there. You can get a card that is attached to the credit line. You can get checks, or you can simply do a withdrawal directly from the line just like you would any other bank account. When you do a withdrawal, that is considered a loan advance. Some places do charge a loan advance fee, so make sure you are reading your terms and conditions and you are knowledgeable to any fees that may incur while having a home equity line of credit. Now, I lastly want to get into the benefits of having a home equity line of credit. A home equity line of credit has some great benefits. You can use the line for large expenses or to consolidate high interest rate debt on other loans. such as credit cards or personal loans. A HELOC often has a lower interest rate and the interest you pay may be tax deductible. That can also be a benefit to you. I would suggest you first consult your tax advisor for more information regarding that part. Another benefit is you can borrow only what you need. Unlike personal loans or a home equity loan, you have to take out a lump sum, which means you will be paying back the full amount that you borrow. Let's say you wanted to get some home improvements done and you want to do it in phases. If you have a home equity line of credit, it can be done that way. If your credit line is $25,000 and your kitchen is going to cost $10,000, then you can borrow $10,000 only and still have $15,000 left over for your other projects when you get to it. That's better than getting a full $25,000 loan all at once that you might decide that you don't want to do anything else other than your kitchen or whatever it is. Also, things could come up that you might want to spend the money on other than home improvements, which you can do. I personally have a HELOC and it's working out good for me. I can transfer the money fast and easy to my checking account. I have a fixed rate option and a variable rate option. So when I do decide to withdraw from it, I get to decide if I want to do a fixed rate or a variable rate. I've used the funds to consolidate a high interest rate credit card. Another thing that I used it for was some things that most people don't know that you can do. I bought a piece of real estate with it. In another video, I will go over how you can use your HELOC or a home equity loan to purchase real estate. There are just some benefits and examples of a home equity line of credit. If you're considering getting one, check out all of the options and compare interest rates. Thanks for watching the video on a home equity line of credit, and stay tuned for my next video that will be comparing a home equity loan and a home equity line of credit to give you the pros and cons to both. I hope this information was helpful. If you have any questions, you could leave a comment below. Please make sure to share and subscribe to my channel, FITCSP, Financial Independence Through Common Sense Practice. You can also check out my website, FITCSP.com, for more information, and don't forget to get your Financially Fit merch today. The link will be in the description box below. And until next time, peace.